So, Ethereum ETFs have now been approved. But what comes next?
What's next?
What's next?
What's next?
Will ETH see the same rocket fuel that we saw with Bitcoin? And most importantly, are we going to see other altcoin ETFs? Solana, NEAR, ADA perhaps? This is a vid you can't afford to miss. Oh, in case you're wondering, who the hell is this guy? I'm Nick, and if you're a regular viewer of our Clips channel, you will have seen me in countless videos. Now, I'm helping out here as well, so we can make sure that in this bull market, you guys won't go a day without your daily fix of Coin Bureau crypto content. So hopefully, it's worth your while.
Well, let's see.
Firstly, where are we exactly with these Ethereum ETFs? Well, last week we got the news that the SEC was doing a complete 180-degree turn on these ETFs. After months of stonewalling and radio silence from the regulator, they reached out to the issuers and asked them to submit updated 19B4 forms. This caught the market completely off guard, from the Bloomberg ETF analysts to the issuers themselves, from the polymarket bettors to the ETH shorts. The ETH God candle was something to behold. Now, most of these issuers then quickly adjusted their applications, and by Thursday, the SEC was ready to approve a total of 5 of them. So, ETH ETFs are here? Well, not quite. You see, while the 19B4 forms are seen as the most pivotal step towards the approval, the SEC still needs to approve the individual S1s before they allow these to begin trading. These S1s are basically registration statements for a company that is usually filed in connection with an initial public offering or IPO. Oh, and fun fact, this 180-degree move by the SEC even caught many of those within the SEC off guard. And that's because the division that deals with the S1 applications wasn't ready to even look at them. Now, that is, of course, happening, but the process could take some time, and that's because there may be requests for amendments or other updates. According to the Bloomberg ETF analyst, this could take anywhere from a few weeks, even up to a few months, depending, of course, on the amount of work that is required to be done by the issuers. It's these S1 applications that could drag on for a while before we can really get these ETFs on the market fully trading. But this then begs another really important question. When the trading starts, is there likely to be a lot of demand? Well, it's a bit of a mixed bag. As was the case with the Bitcoin ETFs, what these ETFs will allow for is those investors who otherwise would not have been able to buy spot ETH to buy them in a regulated wrapper. Large institutions like hedge funds or mutual funds and pension funds would technically be able to gain ETH exposure. And then there are, of course, all the millions of retail investors who want to be able to hold ETH in their 401ks in a tax-efficient way. Eric Balkunas, the Bloomberg ETF analyst, has said that he expects to see at least 15 to 20% of the size of the inflows we saw go to Bitcoin come into an Ethereum product. His colleague, James Seifert, has said on a recent podcast that he expects at least 20 to 25%. So when you consider that ETH's market cap is only 33% the size of Bitcoin's, that's a hell of a lot of buying pressure for ETH. They weren't the only market analysts that were bullish. You had the likes of Joe Lubin, who said that he expects to see a floodgate of demand for Ether when these products are eventually launched. His sentiment was also echoed by analysts at Bernstein Research, who think that the rally that we saw post-Bitcoin ETF approval will play out here as well. However, there are a number of things that are different with these ETH products vis-a-vis Bitcoins. I mean, for one, there is the fact that nearly everyone was expecting them to get denied. And that, of course, means that they may not be ready to start allocating to these funds. Let's not forget that months ago, Matt Hogan from Bitwise Asset Management was saying that the market was not ready for these products yet, as they were still trying to digest the Bitcoin products. And he actually preferred a December timeline. Michael Anderson, the co-founder of Framework Ventures, said, quote, "A lot of people have been caught offside by the Ethereum ETF announcement. Even though the Bitcoin ETF created a crypto ETF roadmap for wirehouses and large registered investment advisors, I still expect that many institutional stakeholders are now scrambling to prime their sales teams on the state of Ethereum and put together a proper infrastructure." So it's going to be a scramble for sure. Then there is also the question of how the pitch should go for these products. I mean, the investment argument for Bitcoin is pretty clear. Digital gold, immutable money. However, how do you make the appeal for something like Ethereum to the normal retail crowd? What would you guys suggest? I would love to know down in those comments. Oh, and while you're down there, why don't you give me a like and hit the subscribe and bell as well to make sure that YouTube gives you a bell as well the next time a new vid hits the tube.
Bro Crypto Podcast.
Okay, welcome to the Bro Crypto Podcast. I'm Chadimus Maximus, go by MaxChad100 on Twitter.
And I am Gigadick, the dude with the biggest P&L in all of crypto.
Bro, say what? My P&L is 100% bigger than yours.
Bro, please. I was longing Doge and drinking neat Belvedere while you were still spot buying BTC on Mount Gox, bro.
Bro, you're still driving a 2020 Aventador. Where's your Bugatti at?
Bro, when bonk hits $1, I'm gonna be rocking a super yacht while you're still stuck in traffic, bro. The Bro Crypto Podcast is sponsored by the Coin Bureau Deals page. If you're looking for trading fee discounts of up to 60%, exchange sign-up bonuses of up to $60,000, and amazing discounts on hardware wallets, then don't be a bro, be in the know, and check out the link in the description below. And now, back to the show.
Bro Crypto Podcast.
Bro.
Bro.
Bruh.
Bro.
Bro.
Bro! Oh, okay, they're still going. Right. Look, you can either listen to these idiots for the next 4 hours, or you can head to the Coin Bureau Deals page and find something useful. Your call.
Anyways, can we get an idea of what demand will be like for these products using current market metrics? Well, yes, we can. For one, we actually already have ETH ETFs out there, the futures kind, of course. And these launched in October of last year, and the reception was, shall we say, underwhelming. And since that time, they haven't really managed to pick up much in the way of AUM or assets under management. Comparing their AUM to Bitcoin futures ETFs, for example, they are a mere fraction. For example, the ProShares ETH Futures ETF has about $95 million in AUM, whereas their Bitcoin futures ETF has over $2.2 billion. So, ETH futures instruments have seen about a 4% demand of that of Bitcoins. Okay, those are just the futures instruments, but we also do have spot products if you wanted a more direct comparison. And that's because Hong Kong just launched ETFs with both Bitcoin and Ethereum at the same time. The ETH ETF inflows accounted for only about 15% of the total we've seen going into Bitcoins. Another institutional litmus test we could potentially use is the volumes of futures trading that we are seeing taking place on the CME. And that's because given that these are regulated futures, they are way more likely to have been traded by an institution. In the case of Bitcoin, the CME has seen the most volume of all Bitcoin futures exchanges. However, in the case of Ethereum futures markets, the CME ranked fourth behind a number of offshore and unregulated exchanges. Then there is also the question of the opportunity cost of holding the ETF shares as opposed to the underlying. Remember, the SEC will not be allowing any Ethereum ETFs that are offering staking rewards. Therefore, investors have to decide whether they are willing to forgo the extra 3.6% or so staking yield they would get. Of course, there are many tax benefits that come with these ETFs, so much so that they actually could trump the 3.6% yield. And there is, of course, also staking and custody risks that they may not want to subject themselves to. So it's not a free lunch. But that's, of course, holding everything else equal. And as is so often the case, that assumption, it doesn't always hold true. One of the major things that has changed this time around is the fact that the regulatory environment is completely different. As mentioned, that reversal on the ETH ETFs was a complete 180, and the only reason as to what appears to have happened can only be because of higher political pressure. Let's not forget that in the same week that the ETFs were approved, you had FIT 21 bill pass the US House. And of course, the week before, we had SAB 121. We covered both of these bills in our weekly news episode, so you can go back and view those if you want more information, by the way. Heck, Trump has even come out and said that he would make the US one of the most pro-crypto jurisdictions, and Biden has also stopped his veto threats. So it's pretty clear that the political climate is a lot more bullish now than it was when the Bitcoin ETFs launched a few months ago. Moreover, by the SEC allowing these ETH spot ETFs to launch, they are making their case for ETH being a security a lot harder to defend. This is part of the reason as to why so many of the broader projects in the Ethereum ecosystem rallied on the ETF news. Without this cloud hanging over the Ethereum ecosystem anymore, it could provide the right environment for that long-awaited rotation from Bitcoin to Ethereum to take place. The ETH BTC bleed can finally stop. According to Mike Novogratz, if the climate really has shifted in Washington, then, quote, prices are going to be much higher than here. Perhaps this could even be the spark that was required to ignite the rocket fuel we need for altcoin season. It would be even more serendipitous if this came about the same time that the Fed started to pivot later in the year. Okay, so this all begs a very important question. If we are going to have an alt season sparked by these ETH ETFs, will we get any other altcoin ETFs anytime soon? Well, let's take a look. Most of the speculation about which altcoin could be next has, of course, centered around Solana, and this is the one that has seen the most institutional interest in the past few months. Let's not forget that Cathie Wood was out here shilling SOL on CNBC a few months ago. And even the OG of CNBC crypto fame, Mr. Brian Kelly, was on TV last week saying that he thinks the SOL ETF is the next one to break. But there are a few other factors which I covered in a bit more detail in a tweet thread, which I will leave linked to down below for you guys. For one, there is the fact that after Bitcoin and Ethereum, SOL structured investment products have seen the most inflows and AUM. And this is according to the data that has been compiled by the likes of CoinShares in their weekly coin reports. It's not just AUM, of course, but the premium that people are willing to pay over AUM for some of these products. For example, the price that the Grayscale G-SOL Trust shares are trading at is almost 6 times greater than the AUM in the fund. On top of that, there is also the numerous surveys that CoinShares has conducted with institutional investors over the past few months. Earlier this year, SOL showed the most growth in interest from these investor types. So, when SOL ETF? Well, not so fast. You see, while the question about ETH security status was always up in the air, the SEC has made it quite clear that they view SOL, NEAR, and ADA, etc. as securities. I mean, this is the entire premise of their lawsuit against Binance and Coinbase. Yes, they are changing their tune towards crypto, but expecting them to drop these cases just like that may be some wishful thinking. But beyond this, there is the one missing component that was present for both Bitcoin and Ethereum ETFs. And that is, of course, the presence of CME-regulated futures markets for SOL and other altcoins. These are needed in order for the SEC to conduct information gathering on the nature of these assets. In the case of Bitcoin, they had been collecting this data since 2017. In the case of Ethereum, it was since 2021. So, even if SOL CME futures contracts listed today, and we took the most optimistic of timelines, it wouldn't be for almost another 3 years until we saw Solana ETFs, or any other altcoin for that matter. Of course, that all assumes that bills like FIT21 won't change the way these assets are regulated. If they are able to provide the right framework for listing futures of altcoins, or better classify that these altcoins are commodities, then it could speedrun these ETFs. And if we do eventually get a SOL ETF, there is nothing stopping other digital assets getting their own ETFs as well. If the SEC is able to change its tune on ETH and SOL, then there is no reason as to why it shouldn't do the same for, say, XRP or NEAR. It opens the floodgates to so many more ETF instruments. Okay, so let's wrap this video up. There is no doubt that these ETH ETF approvals are an amazing harbinger for Ethereum. However, as mentioned, it's not so much the fact that institutions will be able to trade them in a regulated wrapper, but what the complete 180-degree turn signifies for not just ETH, but the entire crypto ecosystem. These products could be launching at a time when there is an increasing legitimacy being added to the crypto space. Legal questions no longer act as a disincentive for broader institutional and retail investors. I also do hope that we will see the Fed flip and remove his foot from the brake in Q3. This is the outstanding ingredient that is required in order to cook up that most awaited long altcoin season. Of course, there are still risks. For one, there is the risk that these ETFs launch as a damn squid and the inflows disappoint on day one. As elucidated earlier, some of the data could support this. We also have to appreciate the fact that institutional investors and retail mom-and-pop investors need to take their time to first get used to the Bitcoin products before they're going to feel comfortable moving into another crypto asset. Which is why it's incumbent on us in the crypto ecosystem to clearly illustrate the investment case for ETH. Why should it form part of a general portfolio? And more importantly, how does its investment case differ from the likes of Bitcoin, for example? So, while we are celebrating the win for the crypto industry right now, our work has only just begun. And the fight, it's still not won. And that's it for my video today, but I would love to get your feedback, of course. So do you think that ETH ETF flows will surprise us to the upside, or do you think there's a risk it could disappoint us on the downside? And then again, after that, and if it is approved, what's the next altcoin that we could see an ETF for? Let me know down below. And of course, if you guys enjoyed this video, then fire up those likes and don't forget to subscribe so you're next in line to receive these good Coin Bureau vibes. That's it for me. Stay crypto.